The Myer update and those retail numbers really took the steam out of the market today. Earlier I spoke to Charlie Aitken from Southern Cross Equities. Charlie Aitken, a mixed performance today and a rather narrow trading range. Is this investors in some sort of holding pattern ahead of this deluge of company profit results?
Absolutely right, Tiki. The market seems to be waiting to be told this week, and this week they're going to get a lot of information from big companies, ranging from the National Bank to Macquarie to Commonwealth Bank, and you can see today even a couple of pre-releases came out and the market reacted to them. So I think you're 100% right. We're going to get some action this week, one way or the other.
Well, as we've heard today, Myer has upset the market. What do you make of their trading update?
Well, I'm surprised that the market was surprised. I think it was a very well-known fact that retailing in Australia over Christmas and January had been pretty poor, but obviously Myer much poorer than the market actually expected. So the reaction there today down 10%. There was switching around into other stocks, but it also weighed on Harvey Norman, David Jones and pretty much anything in the discretionary spending space. So probably a little bit more weakness to come in the retailers.
Away from retail, an infrastructure company, Asciano, has named a new chief executive as John Mullen. A bit of a relief on the share price front, I guess.
Interesting development, this one, Tiki. I think that they've named a guy who is a former head of DHL, the global logistics giant. Interesting because the market thinks there's a theory that Asciano want to exit the ports business. The removal of, or the moving on of Mark Rosethorn, the former CEO, might just clear the way for that. And investors actually welcome this development pretty strongly today, with Asciano shares up 2.5%.
All right, well, there's been a warning now from AGL Energy that the weather events will cut profits by $30 million or more, and yet the share price has gone up.
Yeah, that was actually very surprising, though, I have to say. The share market just comes up with something every day where you scratch your head. AGL downgraded earnings by about 8%. Either way you cut it, it was about an 8% earnings downgrade. It's interesting, though, because the market's sort of believing some people who blame the weather, like AGL, and saying, well, maybe it was a one-off event for them, but not believing other people who blame the weather, like Myer, trying to blame the weather a bit today as well. So one thing I'm sick of is hearing about the weather. We all know about the weather, but it'd be nice if we could get through the reporting season without any more weather comments.
Have you got any surprises, do you think, that are coming up over the reporting season?
Yeah, look, I think this is, I hope everyone's sitting down in their chairs, because I think the surprise in the big cap end could be Telstra. There's a couple of signs that Telstra might be travelling a little bit better. The dividend's obviously going to be 14 cents. So I actually think one of the worst performers of the last 4 years could provide one of the surprises. So we'll see how we go there.
Well, let's hope so. Charlie Aitken, thanks for talking to Late Line Business.
Thank you, Tiki.